It's Monday. That means it's Setup Monday here at BNC. Let's take a look at the BTCs, the ETHs, the other garbage, which is starting to do well. So if you're not using a trend indicator, you're doing it wrong. I like the cloud. That's what I'm going to use forever and always. And the daily time frame is my jam. So far, we have stayed above the cloud since October last year. That's step one. Step two is not to get so overbought that we sort of bake in a mean reversion type of action. And with the TK lines, the Tenkin here and the Kijun here, getting tighter and tighter, that signals that we are far from overbought. If anything, it signals an extended consolidation period. Now, on the very backest of burners, there's a worry that the TK lines will cross bearish, which is a long exit signal. So if you're long, it tells you to close your long. That is a week or two away, if ever, at this point. And we would basically need to make a lower low from last week's low to even consider a bearish TK cross here, and or languish at the current level for an extended period of time. And I don't think that's the case, but it doesn't mean I'm going to ignore it if that happens. So strong bullish bias continues, and a branch on the decision tree is a potential 52.5 to 39.8 short play. Just like there was a short potential here that didn't happen, there's a bigger short potential here that likely at this point in time will not happen, but it's important to incorporate all possibilities here. Now, if we look at why I think that's ETH, let's go to BTC, mix up the charts. So why I think we're going to get a bullish continuation here is because we are painting an ascending triangle, series of higher lows at a horizontal resistance level. You can map that out as far as expected continuation, and you get a move between 70 and 76. The R4 yearly pivot is at 80. The R3 yearly pivot is at 62, 63. So if you're just trading pivots, it says if we break the R3, expect a tap of the R4, at least a journey on the way to R4. All the while we've been consolidating, volume has flattened off to near zero, which to some people is going to look bearish, but that's what you need to see when you are consolidating, when you are making a pattern, bullish continuation pattern in this case. Almost always with a pattern, you're going to see a drop off in volume. Now the caution here is that if we don't pop up in volume when we break this horizontal, like ETH is not, then there's a bit of a problem because you want to be bullish, but it's not an on volume breakout. So there's a little concern that there may not be further continuation. So when I get to ETH, I'll mention that again, but thus far ETH's volume has been lethargic. If you look at the 2-year MA multiplier for BTC, kind of like, other than the cloud, this for me is the next best thing to watch. It's picked the highs, it's picked the lows. This is the 1-year MA. This is 5 times the 1-year MA in the red line here. So sell zone, buy zone. Currently, the sell zone is above 73K. So there isn't so much a price. This is hard for people to maybe understand, but there isn't so much a price level to watch as like a timing component. Because once we break 73, or once we break this 5-year or 5x 1-year multiplier, then it says we have 3 to 4 good weeks historically of insanity. You know, that's when we hit 100K, is when if we break 73, guaranteed, we're going to go nuts. We're going to see some stuff we've never seen before. Everybody and their mother is going to talk about their BTC strategy, that sort of thing. Something else you're going to see a lot of this week is the Pi Cycle top indicator, which has sniped the top, the past 3 all-time highs. It did not snipe the July 2019 top, but in this case, we will most certainly get across within the next 7 days here, I'd imagine, which will signal the beginning of the end for the bull market. Now, I'd be more concerned if all these charts on lookinto bitcoin.com were showing overbought, if all of the backtesting lined up and said the MVRV is overheated, the Puel multiple is overheated, 200-week moving average is overheated. This is not the case. So this is why the Pi Cycle top indicator is a data point among many to consider. Now, should you be concerned that we're crossing on this? Sure, I'm concerned, but I'm not going to jump out of every single cold storage wallet, right? It's just part of the equation here. Just a further signifier that we are in the beginning of the end. ETHUSD, again, since October, it's been above the cloud. It's been go time ever since. It's tapped the key June, the red line, 4, 5, 6, 18 times now. It threatened a bearish TK cross, which did not happen. It threatened a bearish edge-to-edge move through the cloud, which did not happen. A 18 to 14 edge-to-edge play remains, again, a branch of the decision tree on the back burner, but this very much looks like it wants higher highs. Volume, the profile here is textbook. It's shockingly textbook. You're getting higher highs and less volume, so it makes sense that we're consolidating, it makes sense that we're pulling back. We were painting bear divs the entire time. But what we need to see going forward is a pop-up in volume, certainly. I mean, ideally, you get this wax wane quality of volume on any new all-time high push or any new massive price push. Not quite seeing that just yet. Here's the ascending triangle for ETH. Very similar to BTC, same rationale, descending volume profile. It's already broken out of its horizontal range. Something else I should mention is that for most patterns, you'll want to see them break before they're, well, not before, but around 3/4 complete, which for BTC says it's ready. You know, it's done. It's time to take that bullish consolidation out of the oven. In ETH's case, it actually broke significantly earlier than expected if this was indeed an ascending triangle. So all in all, again, bullish continuation measures out to 2,500 to 2,800. Our 5 yearly pivot is at 2,500. We're flirting with a daily break of the R4 yearly pivot. So if you treat this as a ladder, again, it says we're on the way up. So ETH looks good to me. ETH BTC looks bullish-ish. I don't know how much more it has in the tank, considering it's still inside of the cloud, which is really the big thing. This is the weekly cloud. I don't like looking at ETH BTC on any lower time frames. I think it's too noisy. But on the weekly, it tends to do pretty well. Trend-wise, you can see it hasn't been above the cloud since 2018. So going into June, July this year is its first chance to be above the cloud since 2018. It's still in this pitchfork, which fits rather nicely, in my opinion. You're seeing the median line as resistance 6 to 8 times here, convincingly. Some sort of diagonal channel here. And ideally how this is going to work is into June, July, this breaks above the median line here and then goes for 0.1. Something like that, I could imagine. Where it sits right now, for me, the risk reward just isn't there to be mega overweight ETH versus BTC. I think they're both about to move up pretty nicely. ETH may outperform BTC a little, but I think in the near term, there's going to be a catch-up trade with BTC once it breaks 60K. Just going to plug the Techme Capital Holistic ETH BTC Fund on Enzyme real quick. It is a non-custodial portfolio management tool where you're basically copy trading. I'm the driver here. You can see all the trades that have happened and when and for how much. You can see AUM, all that sort of thing. There'll be a link for this fund in the description of the video. And I just want to go through some alts real quick because for this week particularly, the first week of Q2, they look like they want upside. Link BTC is kind of a proxy for that. It has a history of Adam and Eve double bottom patterns. It has a history of inverted and normal head and shoulders patterns. This looks like a massive potential Adam and Eve for Link BTC. So how this would work is it would take another maybe a couple weeks to get to 75K sats, and then it would actually experience bullish continuation to 100K to 115K sats. So depending on risk, size, leverage, blah, 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 you know, there's a trade potentially from the bottom here to 75 and then above 75 to 115. Looking at Tron, which is moved before all the other charts I'm about to show you, but Tron's a good example. I'm not going to trade Tron. This isn't a recommendation for Tron. None of this is investing advice. But Tron is a chart example of what may happen with some of this other stuff. It had this W double bottom, broke up, hit the 3618 fib. Really, ultimately, that's all you need to see here as far as potential for the other stuff. Now we can talk about the previous accumulation zone. We can talk about previous highs, whatever. That's fine. But the point being here is that this W double bottom should break up. We should see heavy mean reversal, and potentially overperformance to stuff like the 3618. Now, these alts only have this small window of opportunity so long as, in my opinion, BTC does not break 60K. So once BTC breaks 60K, I think that's going to suck everything out of the room liquidity-wise. But all these charts look very similar as far as the setup is concerned for this week. OMG, W double bottom. Neo BTC actually looks probably the best as far as breakout potential because it's got this ascending triangle. It's already breaking out. That looks like it could retest, any of these previous highs, but it looks good for up at this point. Tezos, bit of a joke among many, loves putting in these mega consolidation periods. Has a W double bottom as well. XMR, W double bottom, that's the weekly. EOS, W double bottom, this is the weekly. Looks ready to go. I didn't measure these out, but I think you get the point. All these charts are very similar. Even Zcash or Ztrash or Zero Cash, as many refer to it, looks pretty good, even though this is a mess. It's an amalgam of W double bottom, ascending triangle, diamond bottom, I don't know, whatever. Looks like it could potentially even break this bearish pitchfork that it's been in since 2018. XRP, again, absolute scam coin. Doesn't matter. This could be a rotation effect from things like NFTs or other 10 to 100x coins that have done things into things that haven't done things. That's why if a coin's got a pulse and a warm body on an exchange, then it's tradable. It's never dead. It's never dead. Stuff like XRP, you're going to see rotation into this, and it's going to go up, unfortunately. Lastly, LTC BTC continues the grind down on this potential descending triangle, falling wedge, into previous all-time lows zone. For me personally, I will be buying it anywhere sub 003. Until then, it's not really that attractive to me. I expect BTC to break 60 before LTC breaks this falling wedge. So I will be buying it when it's, when it looks like this, when it looks like a parabolic downside, which maybe to many it already has, but this is what I want to see. I want to see absolute loss of value against BTC before I step in front of that freight train. So that's all for this one. Dislike, comment, share, subscribe. Get us to 10K subscribers, and happy trading.